right, so welcome to today's webinar, How to Tame Your Clients' E-commerce Payment Gateways. My name is Gary Dehart, and I'm the president or the uh, managing partner of Insightful Accountant, and I am your host for today. Really, I'm just here to intro our presenter, who is Teresa Slack, CPB and CEO of Financially. She will share her bio and her credentials once she gets through, but my understanding is that she is the person to talk to when it comes to the topic of e-commerce, especially as it's related to QuickBooks. Before I do turn this over to her, I do have an announcement or a couple of announcements and some housekeeping. So, have you heard of our Be Insightful premium content offering? Matt, if you would go ahead and pop that poll. We offer 9 training tracks, and that covered up my cheat sheet here. Hold on. So we do offer 9 training tracks with speakers like Murph, Kelly Parks, Christine Gervais, Kyle Turiff, and others who are covering 9 different topics like what you see there in front of you, and also access to about 36 CPE credit hours per year, as well as exclusive access to content that we write just for members, as well as content to the archives of previous webinars and other blue papers and papers that our speakers have written. Again, exclusive for the Be Insightful premium content offering. So if you'd like some information on that, just click yes. Right now, we do have a $1 first month, $49 a month after that, or just a flat fee of, I think it's $4.99 per year. So on to the announcements. This is a CPE eligible webinar, and in order to qualify, you must be here for 50 minutes, 5 minutes, 50 minutes, and answer at least 3 of the poll questions. I think we have 4, counting the one that we just posted. If you meet this criteria, we will send you your certificate within about 24 hours. If you have questions during the webinar, we do have the chat open, so you can just drop those questions into the chat. I think Teresa is going to target to answer those towards the end. So if you have a specific question, write the specifics of that question in the chat. Don't just say, "What did you mean by that, Teresa?" Say, "What did you mean by you'd rather stay Canadian and not be American, Teresa?" Just so she has some context of what your question's about. You will receive an email following this event with a link to the archive, which will be posted to our YouTube channel. We'll also drop a copy of the presentation into the chat, and we'll also have a link to a copy of the presentation, which sits in a box folder that we'll send out to you following this as well. Lastly, at the end of this presentation, there's a short survey, 30 seconds to answer 3 short questions. If you would do that, it just helps us give feedback to the speakers. That is all I have. So, Teresa, thank you so much for being here. Thanks for sharing your wealth of knowledge, and thank you to the participants who are here as well.
Thank you, Gary.
All
Awesome.
yours.
Okay, guys, let's get started. I'm going to share my screen so you guys can all look at my slide deck as we go through. And as Gary mentioned, you will be given a copy of this slide deck as well. Let's just make sure you're seeing my slide deck. Perfect. You guys should have that now. I'm just going to make sure I've got the chat sitting here open on the side in case anything specific comes up. Okay, let's get started. I'm really excited to be here today, and I just want to thank Gary and the Insightful Accountant for inviting me to be here today. This is a 1-hour webinar, but I can stay afterwards to answer some questions. So if you do have them, as Gary said, drop them in the chat with a little bit of context is helpful, and I'll do my very best to answer any of your questions as we go along. Okay. So let's jump into this. First, let me introduce myself. My name is Teresa Slack, and I'm one of the 2 owners of Financially Bookkeeping Solutions. We are the Canadian leaders in e-commerce bookkeeping for Shopify and Amazon, and we work with all kinds of other platforms. Now, my sister, Connie Smith, is my partner, and the 2 of us started Financially 10 years ago as a 100% virtual bookkeeping firm. When we started, we were offering bookkeeping, taxes, business development, really for any small business. We did not have a niche. We would work with anyone that needed bookkeeping support. But at the same time that Connie and I started Financially, my daughter started a career at Shopify. So, of course, over time, we started learning more and more about Shopify. And I actually started by creating my own Shopify store for fun. I do a bit of artwork, which you can see behind me. And I thought, oh, I want to play with this. So I created a little store for my arts and crafts and kind of fell in love with it. So we then actually started offering that as a service within our bookkeeping firm where we would help businesses set up their Shopify stores. But we are bookkeepers. So the next thing was, well, okay, how do we get all of that really important financial information out of Shopify and into the bookkeeping software? And with that, our niche was born. And, we've certainly noticed over the last number of needs that over the last number of years that there is a real need in understanding the complexities of e-commerce accounting. And our accounting colleagues have learned we are the go-to experts for e-commerce, and we're always honored when they bring their clients to us for assistance in creating streamlined e-commerce processes. Now, when we started this journey, it was just Shopify. And then one of my accounting colleagues called me up and said, okay, I know you're the experts in Shopify, but what about Amazon? And I kind of went, sure, we can learn Amazon. And, that was fun having at that point never even bought anything on Amazon before. It felt like a completely different animal for us. So I did the smart thing. I started buying stuff on Amazon. And yeah, that was easy. I'm not too sure that my hubby was too pleased with me, but I used to just tell him, it's research, honey. I have to do this. And over the years, we have expanded and worked with all kinds of different e-commerce platforms like Walmart and Etsy and eBay and Best Buy. But I have to say, the majority of our clients have Shopify or Amazon, as well as those other platforms. And Connie and I are loving our journey of focusing our business on serving e-commerce sellers, but also on the accounting professionals that love them. So, what exactly are we going to cover today in our time? I have a lot. I may have to talk a little bit fast to fit it in. First, I'm just going to give you a little bit of an introduction to payment platforms and gateways. Then, we're going to talk about clearing accounts and how to use them to streamline your processes. Then we're going to jump in. We're going to look at a few of the most common payment platforms that we see. We'll talk about the pros and cons, how to use them, and then we'll look at how do you reconcile each of those platforms. And as I mentioned, I will save time at the end to answer any of your questions. But before we get further, I just want to get a sense of who we have here. So I have another poll question for you. If we can bring that one up, I just want to get a sense of, how many clients are you working with for e-commerce? Love to see once we give you a minute to answer that. I want to just see the results. Okay, hopefully okay, the poll has closed. Okay, so about 73% of you are working with 1 to 3, a few working 4 to 8, and 11% have 20 or more. So we've got quite a nice breadth of attendees here today, some with tons of experience, some we're probably just getting started with maybe their first few e-commerce clients. That's awesome. Thank you for answering that. So let's get started with welcome to the wonderful world of payment gateways. There are just so many different payment gateways. We could not cover them all today, but we are going to talk about a few of the most common ones that we see. And if you haven't heard the term payment gateway before, it simply means a method of accepting payments from customers. Now, often we find business owners and sometimes accounting professionals will confuse the payment gateway with the e-commerce platform that is using the payment gateway. So for example, on Shopify, you can attach all kinds of different methods of payment like PayPal or Apple Pay or Google Pay, or Moneras or Authorize.net. Those are payment gateways that you're attaching to Shopify as a method of payment. But sometimes the payment gateway is also the e-commerce platform. So for example, with Amazon, when your client sells on Amazon, you have only Amazon as the payment platform. You can't decide what you want to use. You can't decide, oh, I think I want to use Stripe as my payment processor on Amazon. When it's a marketplace like Amazon or Etsy or many others, the payment processing is built into that marketplace and you don't have choices. Things like Shopify, Squarespace, BigCommerce, you get to decide as a business owner which payment gateway you want to use. So I wanted to start our discussion today with clearing accounts because they will be important as I show you the different gateways and show you how to use and reconcile them. Clearing accounts really are your best friend when you're working with e-commerce clients. A clearing account is used when the e-commerce sales are brought into the books in a manner that does not match how the payouts are coming into your bank. So for example, Shopify Payments does a lump sum deposit into your client's bank. Depending on which integration app you're using to bring the sales in is going to determine if a clearing account is going to make it easier for you. If you enter individual sales receipts into the books, you wouldn't be entering those sales receipts directly to your bank account because that doesn't match how the deposit comes into your bank. So in this case, we would want to use a clearing account for all of those sales to go. And then a lump sum transfer is done from the clearing account to the bank to match the deposit. And then entries are done to record the fees. The goal with a clearing account is to make your reconciliations easier and more accurate. So let's look at some of the common integration apps and when we would need to use a clearing account. The integration app A2X does lump sum journal entries. Bookkeep is another integration app, and it gives you options, and one of them is a daily summary. So when we're looking at what we're calling lump sum entries, we have a process we need to use. I'm going to use A2X for this example, but this would come into play whichever you're using if it's doing lump sum entries. Let's use A2X though. If we look at Shopify payments in A2X, that journal entry that A2X is going to create will perfectly match to the deposit in the bank. So in this case, you don't need a clearing account because the way it's coming into the books matches how it's coming into the bank. However, if we look at a different gateway like PayPal or Stripe, Shopify doesn't actually know when a payout happens. So A2X can't summarize it by the payout. In this case, A2X allows you to choose how you want all of what they call third-party gateways handled. You can choose a daily summary entry, a weekly, or a monthly entry. What A2X does, for example, is summarize all the PayPal sales for that period. In this case, the deposit into the bank happens when your client transfers money from PayPal to the bank. It has no direct relation to the actual sales that happened in Shopify. In this case, you do want to use a clearing account because when you look at the PayPal statement, which is a bank statement, you're going to see all the individual sales, but A2X will have summarized them. So a clearing account is used. The A2X journal entries would be set to use a PayPal clearing account. Then you would do individual transfers from the clearing account to the PayPal bank so that they match the actual PayPal statement that you're going to reconcile. When you use this method, we like to use bank rules to speed up the process. And we use QuickBooks Online so we can create bank rules that will automatically create transfers from PayPal clearing to the PayPal bank. Now, as long as it's not multi-currency, this works beautifully. We will talk a little bit more about that later. Okay. Then we also set up bank rules to automatically generate the expense entries for the fees. But when you have a multi-currency PayPal account, the bank feed in QuickBooks Online does not work well because the feed brings in a mix of all the different currencies into one PayPal bank feed. If you have some Canadian entries and some US dollar entries, the currency is not distinguished in the feed. It all comes in as if it's in one currency. And we do have a different method for handling that. With Amazon, since the deposits come into the bank in lump sum and A2X does lump sum journal entries that perfectly match, in that case, we don't need a clearing account. So you would use this kind of a methodology whenever your integration app is doing lump sum entries into the books, or even if you're doing it manually by a lump sum entry. Now, these apps that I'm showing on the screen and many, many more, these ones do individual sales receipts or they do invoices and payments into the books. And again, we need to think about how is the money actually coming into the bank to determine if we need to use a clearing account. Shopify Payments does lump sum deposits to the bank, less of the gross sales, less the fees. So it'll be a net payout. Since these apps are now doing individual sales receipts, we wouldn't want to code those sales receipts to the bank because that's not how it comes in. Therefore, with these apps, now when we're looking at Shopify payments, we would want to set up a Shopify clearing account. Each sales receipt would be entered as paid by Shopify payments, which would be coded as deposits to a Shopify clearing account. Then based on the deposit that Shopify has done, transfers are done from the clearing to the bank to match the deposit. And then an expense entry is done to record the expenses from the clearing account. And this would bring your clearing account back to zero. Now let's take a look at PayPal. Since these apps are doing individual sales receipts, when you look at your client's PayPal statement, each individual sale is listed on that statement. In this case, we actually do want to code those sales receipts as deposited into the PayPal bank account, and a clearing account would not be needed. With these apps and others like them, as long as we have a one currency PayPal account, you can set up bank rules to automatically process fees that show up in the feed. Then once you have imported all the sales using your app, you would simply go to the PayPal feed, click match, match, match on each of the individual sales. And once you've entered everything, you're ready to start reconciling the PayPal bank. Now for Amazon, since Amazon pays out in lump sum and these apps are doing individual transactions, now we need an Amazon clearing account for this one. And this method and kind of thought process will work with any integration app, or if you're manually entering individual sales receipts. Okay. So let's do another quick poll question. I'm just curious because we have a number of people here who are currently working with e-commerce clients. How many of you are currently using clearing accounts to streamline your processes? I'm just interested to see. And while we're doing that, I see Jacqueline is asking, did you say Shopify does not need a clearing account? Jacqueline, that depends if you're doing lump sum entries into the books, like an A2X type integration app, then you wouldn't need it. If you are doing individual entries, then you need it. So it's not that Shopify needs or doesn't need, it really is based on how are you bringing the sales data into the books. Okay, we'll give that another second and then we'll see how many of you are currently using clearing accounts. Okay. Okay, let's see. Okay, so 22% are using a lump sum. This is the wrong question, but that's okay. I'm interested in this one too. So 22% of you are doing lump sum entries using apps like A2X. 13% are doing transactional, like using an app like Commerce or Cinder. 35% of you are doing lump sum manual entries. 22% are doing manual sales receipts, and 9 are like, I don't know. And that's fair. That's great. Thank you. I appreciate knowing this. So let's carry on. Just gonna close that. All right, so now that we've kind of talked about the basics of clearing accounts, I want to move over and start talking about a few of the payment gateways, how we use them, and I'll be referencing clearing accounts as we go. So let's start with Stripe. Stripe is a very common payment gateway. We see a lot of our clients using it. Stripe connects to your client's e-commerce platform as a method of payment. Stripe allows businesses to accept credit cards online. And it also does have a POS system, which is a point of sale terminal. So you can use Stripe both online, but also in person if they have a physical store or they're doing pop-up shops. And Stripe really does have good reporting, which makes it easier to work with for us accounting professionals. So let's talk about the pros and cons. On the pro side, I believe it has good reporting, which allows for a great reconciliation process. For your clients, it's super easy to get it set up and attach it to an e-commerce platform. I find the fees are similar to the other gateways. It does have those point of sale terminals for in-person. It's definitely very well known and trusted. You do have the option to add all of your clients' inventory right into Stripe. It handles multi-currency without any issues. It has a newer billing section that offers subscriptions, invoicing, and doing quotes. And there is, last year they came out with Stripe Tax, where you can actually set up tax right within Stripe so that if you're selling directly through Stripe, you can have it calculating the correct taxes for you. Now, when Stripe is attached to an e-commerce platform as a payment gateway, you cannot set up tax. And that makes sense because it is expecting that the e-commerce platform is calculating those taxes. And then on the con side, Stripe doesn't have a direct connection into QuickBooks Online. I'm not sure if it has a direct connection to other accounting systems. So when you're using Stripe, you do need to use an integration app to bring the data in, or you are recording it manually. Some of the unique challenges and connections around Stripe. In Stripe, it doesn't have what I would call kind of a standard bank statement where on one thing you've got an opening balance, you've got all your entries and a closing balance. You need to run a couple of reports and combine them, but I'm going to actually show you how to pull the reports you need. And when it comes to connecting Stripe, as I mentioned, you're going to need to use an integration app or record it manually because it doesn't have any kind of direct connection, at least into QuickBooks Online. Stripe really is great. We love it as long as you understand how it works. We like to sort of push clients to using it because it has better reporting and better visibility on client information than some of the other ones that we'll talk about today. Okay, so let's move into how do we reconcile it? As I said, it's a great system. Stripe pays out the balance in the Stripe account, less any fees or any returns to your client's bank account on a regular basis, which differs from PayPal. PayPal is really like another bank account, which holds a balance until your client decides to move the money. Stripe is what I would call a true gateway, as it does pay out the balance to your client's bank. When it comes to using Stripe on your client's e-commerce platform, we need to think about what integration app are we using to bring the sales into the books and how it's going to affect your reconciliation process. For integration apps like A2X, it's going to again do those lump sum journal entries based on either a daily summary, a weekly summary, or a monthly summary, for Stripe anyway. These entries are not based on the payout like it would be if it was Shopify payments or if it was Amazon payments. So therefore, if you're using A2X, you're going to want to have a Stripe clearing account because the payout in the bank will not align with how the sales are coming into the books. Journal entries are done for the sale. It could be for all the sales for today or all the sales for the week or for the month. And the payouts from Stripe are done on a different schedule than how A2X is summarizing them. The A2X entries are going to drop all of the sales into a Stripe clearing account. Then you would set up a bank rule to automatically do transfers from the clearing to the bank to match the payouts. Then you would need to enter your Stripe fees recorded as an expense paid from Stripe clearing. And this should clear out the balance sitting in your Stripe clearing account, and you'll have all the right information. Now, this Stripe clearing account should be reconciled each month to make sure that all the sales have been paid out to the bank and that the fees have been recorded and any transfers to the bank are done. This makes sure that you have high quality financial information. And as a clearing account, we want these accounts preferably to reconcile to the ending balance shown on the Stripe statement. And I'm going to show you how to pull that statement in a minute. Now, for apps that are bringing in the e-commerce sales individually, such as apps like Cinder, Dexcommerce, Bold, there's lots of them. These apps are going to do individual sales receipts with Stripe as the payment type, or it'll do invoices and payments. You'll want to set up a Stripe bank account instead of a clearing account. And the invoice payments or the sales receipts will indicate Stripe Bank as the payment method. These apps will usually also record the processing fees, so it'll put in the expense entries for your fees. Some of these apps will also do the transfers from the Stripe bank, if you want to call it, to the client's bank based on the payout. Therefore, this process can sometimes be a little bit easier. Once you've sent over all the sales data, you can move right to reconciling Stripe, and you don't necessarily need a clearing account. You have a Stripe bank account, and you'll want to reconcile that Stripe bank account to the Stripe statement as you would any other bank account. Okay. Now, I do know we have some questions, but I promise you I will save time at the end and I will stay at the end until your questions have been answered. So let's look at the actual steps to reconcile Stripe. When you log into your client's Stripe account, this is the home screen. Lots of great information, but as accounting professionals, we mostly look at reports. To get the reports you need, you're first going to click on where it says Reports. And then when that screen pops up, you'll click on Balances. Once you're in here, you're going to choose the time frame that you want to run the report for example, December 1st to 31st. Stripe will take a few moments to generate. Then once the reports are generated, you'll see three sections. There will be balance summary, balance change from activity, and payouts. And you'll want to click first on the downloads, and that's going to give you a report that looks like this. So this is the summary. You can see it has a starting balance, it has a summary of the activity, and it has the closing balance at the end of the period. And we need that to do our reconciliation. Then under the second section, which is called balance change from activity, here's where you will download all the individual entries for the month. Okay. And to get the correct download, you don't want to click on the download at the top of that section, or you basically just get what you see on the screen. So instead, you want to hover your mouse here on the charges line. And when you do that, a second download button pops up, and that is going to take you to a screen where you can get the transactions. So when you hit that, it takes you here, and you're going to want to choose how you want to grab the information. We recommend you choose itemized, which is the individual sales. Then under the reporting category, I usually just choose all, like give me everything. And then you can click download. Now you'll have a report with all the individual entries. And then lastly, the third section is payouts, and you're going to want to click download there to get that. So reconciling. Now that we've downloaded the report, once our integration app has sent all the sales over to the books and you've downloaded your statement, you're going to do one of the following two processes, depending, again, if we're doing lump sum or transactional. So for A2X, when using this method, you're not reconciling to the individual entries. So, in part 2, we sort of downloaded the detail. If you're using A2X, you don't really need that detail. You need the summary information. The opening balance in the books should match the opening balance on the statement. And you're going to enter the closing balance you see on the Stripe statement. In my example, it had a 0 balance at the end. Then you're going to go through in your bookkeeping software and you're going to check off all the A2X journal entries. You'll check off the expense entry you created for the fees. You'll check off the deposits from the payouts report that you downloaded. And once you've checked all of that off, it should reconcile. If it doesn't, you can drill down into the details because we did download the detailed transactions from Stripe, and you can drill down into the A2X entries to see where is my discrepancy coming from? Why am I not reconciling? Now, if we're using transactional entry, the opening balance on the Stripe statement should match the opening balance on the reconciliation screen in the books. You're going to enter in that closing balance from your Stripe statement. Then using the detail report that you've downloaded, you're going to check off each of the individual sales, any refunds, transfers to the bank, the payouts. You're just going to use that detail to check everything off. And it should reconcile. And again, if not, you want to look at those details. You may need to jump into the e-commerce platform to, how come I'm missing something? And often your integration app will help you as well if things aren't quite lining up. I often find if it's out, it could be due to timing. The sale might have happened on the Shopify side and your integration app has brought it in, but maybe Stripe doesn't pick it up until the first of the month. So sometimes due to timing, you may have outstanding things at the end of the month. Okay. All right. So that's Stripe. Let's move on and have a quick look at PayPal. We all know that PayPal is one of the most commonly used payment gateways out there. Lots of complexities when using PayPal, depending on how your client is using it. The reason PayPal is so popular is because it's super easy to get it set up and attached and start getting paid. It's worldwide, it accepts and converts all currencies. It gives clients peace of mind because a lot of people don't love putting their credit card information online, and PayPal allows them to keep that information secure. So it's very well loved. Not loved by accounting professionals for the most part, though. Okay, let's talk pros and cons. On the pro side, it has relatively good reporting to allow for a reconciliation, but they don't make it easy. And until you get used to understanding a multi-currency PayPal account, it can be very confusing in the beginning how it works. For your clients, it's certainly easy to get it set up and integrated into the e-commerce platform. The fees I find are very similar to the others, very well known and trusted. It does handle multi-currency from a client perspective beautifully, but from an accounting perspective, they do make it a little bit hard until you get used to it. You can configure sales tax in PayPal, but again, if you're using PayPal as a payment method attached to an e-commerce platform, you don't want to set up taxes because the e-commerce platform is already doing that. And it does connect into QuickBooks Online. I think it connects into others, but multi-currency is not so fun on this one. So let's talk about a few of the cons. So although your client's PayPal account will connect into the bank feed, you need to be very careful with multi-currency. You noticed I mentioned earlier when we were talking about clearing accounts that bank feed will have a whole mix of currencies. You can't really process things into the books that way. The multi-currency sales through PayPal can be challenging, depending on the integration app that you're using. And I do find that the multi-currency exchange rates for moving sales from different currencies are much higher than the bank, so it will cost your client a little bit more. And unless you have a login to PayPal for your client, you will need them to send you the statements and the details. We usually recommend that you ask for a read-only access to PayPal so that you can just go in and grab what you need, but make sure it's read-only. So unique challenges. So here's where we're going to spend a couple minutes. I hope I'm not going to go over on my time. We'll see. When PayPal connects into the bank and it's all one currency, you're golden. You've got it in the bank feed, you've got the statement, everything is one currency. It actually is a great system. But when there's multi-currency, let's first talk about multi-currency purchases. So your client is using PayPal to buy things in different currencies. The way PayPal handles this is, for example, if your client, let's say, for example, they have a Canadian PayPal account, that's the home currency. But this Canadian client buys something from the US. PayPal will automatically create a USD PayPal account within the Canadian account. Then if the client buys something in euros from Europe, PayPal is going to create a euro dollar PayPal account. So you'll have multiple PayPal accounts within the same. And often this is okay on the purchasing side because PayPal is going to automatically convert those amounts back to the home currency, and it's either going to withdraw the amount that it needs from the home currency if PayPal has a balance in it. And if not, it's going to go to the backup funding. So it's going to go to the bank account or it's going to go to the credit card and it's going to grab money from there and put it in the PayPal account, and then it's going to convert it to the currency and then pay that expense. So you can see it's a little complex following the money. Now, when it comes to multi-currency sales, so for example, we'll talk Shopify. Shopify allows buyers to check out in their own currency, wherever they are in the world. This works okay if they're paying with credit card and using Shopify payments, which is built in, because Shopify automatically converts that sale into whatever the home currency of the Shopify store is. So for example, if this was a USD Shopify store, it's going to convert all international sales into USD for reporting and for payout. But PayPal will keep the funds in a foreign currency. So now when you look at a multi-currency PayPal account and there were multi-currency sales, you'll actually see sales and funds sitting in USD, in euros, and so forth. Now, the issue we experience is that Shopify does convert the sale to the home currency. So let's say, for example, Canadian, but PayPal is keeping the payment side in a foreign currency. So when the sales are picked up by the integration app and brought into the books, they are often brought in the converted currency. So I now have a Canadian amount sitting in the books as the sale, but the payment side of it is sitting in a foreign currency, and you're going to have to do adjustments. And then for the statements, at least QuickBooks Online does not fetch them, so you do need a login or you need your client to send it. And for connections, it does connect into the bank feed, but you do need to be very careful. PayPal is great from a customer perspective. It is not great from an accounting side. It does involve some complexities around multi-currency. Now, as a bookkeeping firm, when we are pricing our clients, we actually have three levels of fees for PayPal. How many PayPal accounts, how many multi-currency PayPal sub-accounts, and do you also have multi-currency sales? And each of those things add to the complexity and the knowledge and the work that you need to do. So we do have kind of upcharges for those. Okay, now before we jump into how to reconcile it, I wanted to pause just for a minute and tell you a little bit more about Financially and how we are supporting our accounting friends. Now, we are very passionate about helping our accounting community, and we want to make things easier for you, and we want you to be able to build and grow a profitable business in the e-commerce space. So we do offer some different supports. The first one is that we will work with you and your client to create an integration strategy to get things moving nicely and smoothly into the books. And we also run a training academy where we teach professionals just like you how to get great at e-commerce accounting. And I'd love to invite you to join. You can learn more. We do live training every month. The training is recorded. You're given access to recordings, resources, downloadable workbooks, templates, tools. We do a round table every month where we get together with members, answer questions, give advice, share knowledge, and help you with your complex e-commerce challenges. Now, if you scan that QR code, you can enter your email address, and as a special gift, I'll send you my ebook. It's called The 6 E-commerce Accounting Complexities You Need to Know About. So when you enter your email, you will immediately get an email back with the ebook attached, and there'll be a little bit more information in that email about the Academy to see if it might be right for you. But I always like to do something special for people that come live to these things. So I wanted to offer you a special 20% lifetime discount. It is a monthly membership. You can join anytime, you can leave anytime, no questions asked. But when you join, if you enter the discount code NEW20, it's going to take 20% off your monthly price, and it also locks in your price for good. So other new members will pay more, but your price will never, ever increase. So you will continue to get access to more and more training, more support, and you'll always have that same low price. So scan the QR code, grab your free ebook, and think about maybe joining the Academy. But if a monthly learning, sort of learning slowly month over month is not your game, and you're like, no, I need to know it now, we also do offer the first 10 months of our training course as one course. Each of the modules includes 2 one-hour training sessions. Again, you do get the downloadable resources. What you won't get is the ongoing training and the support as we continue to deepen your knowledge, but you can learn very, very quickly. And you can also use that 20% discount code. It saves you about almost $500. And lastly, we do offer a few of our one-off webinars, kind of similar to the one we're doing today for a very low price. It's just a one-time thing. You can go in and watch it, and it is accessible and available to you to watch as many times as you like. Really, our goal is to help as many accounting professionals as possible get great at e-commerce accounting. We want to relieve your stress. We want to save you time and allow you to build a profitable business in the e-commerce niche. And we've definitely seen a massive growth in e-commerce, and it has exploded over the last number of years, especially during COVID. And, we want to support more and more e-commerce clients, but to do that, we need more expert accounting professionals. So I invite you to check it out, and at the very least, grab that free ebook as my little gift. Okay, let's look at reconciling PayPal. Now, PayPal is a payment gateway, but it's also really a bank account where it carries a balance until your client decides to move it. And we need to reconcile it like we would any other bank account. So to grab your PayPal statement, if your client has given you access, you're going to go to Activity, and then under Payments, you'll choose Statement Monthly or Custom. And this will then generate the monthly statement. And this is what you're going to use to reconcile your PayPal bank account. And you're going to use the standard reconciliation feature in whatever bookkeeping software you're using. So I'm not going to show you those steps I know you know how to do a bank reconciliation. When PayPal is linked into the books and has a feed and it's all one currency, it is very simple, depending on which integration app you're using. And the reality is most e-commerce sellers have multi-currency PayPal accounts. Tell me in the chat, do you guys have clients with multi-currency PayPal and they're accepting, oh, sorry, I see a question. Yes, yes. Okay, you guys are. No, yes, yes. Jacqueline says, I don't see the ebook. It will pop up with a pop-up, Jacqueline, that says enter your email address and you will get the ebook. Okay. Some have multi-currency, some do not. Okay, that's excellent. If your client has their PayPal settings set to keep funds in foreign currency, which is actually the standard setting, then you actually will need to set up PayPal accounts in different currencies in the books. Because when a euro sale happens, there's going to be euros sitting in PayPal. When a US sale happens, there'll be US dollar sales sitting there. When Canadian sales happen, you'll have Canadian dollars. And the standard is PayPal will keep those funds in a foreign currency. But you can change that setting in PayPal and tell it to not hold funds in a foreign currency. Then it will automatically, whenever money comes in there, it's going to automatically convert it back to the home currency. And in that case, you may not need to set up multi-currency PayPal accounts in the books. But there is an extra fee for that PayPal charges. I have a feeling it's probably less than what it would cost them to have their bookkeeper manage, 10 different currency PayPal accounts. There's also a setting in Shopify under markets that lets your clients restrict what currency. So you don't have to let your clients check out in every single currency out there. You can say, I want them only checking out in USD or just USD and Canadian or just USD and euros. So you can limit that. You don't have to all of a sudden have 15 different currency PayPal accounts. You have ways to control it. So let me show you just a little example of one of our clients. This one is in French. I apologize for that. But this is the Euro section of one of our clients. And you can see at the top, that's an expense. So this client purchased something in euros, which is not an issue because you can see it just went in and out. It actually went to the Canadian PayPal account, grabbed some Canadian funds, converted it to euros, and then paid this expense. So you could technically just enter that in the Canadian dollar amount or US. But then look at September 29th. Here we see a Shopify sale in euros. The sale was 98.91 less 421 euros, which left 94.70 euros sitting in a PayPal euro account. We don't see a transfer out like we do on the others. We now need a way to track and reconcile this. Okay. What makes this more complex is that Shopify will have converted that sale to Canadian, and that is the amount that was brought into the books. Now I have euros sitting here. I need a way of matching the exchange rates so that the sale and the payment line up. And you often in these cases do need to do some exchange gain and loss entries to get those two to line up. So let's talk quickly. Oh, I have a feeling I'm going to go over. How fast can I talk? I guess we're okay. We're okay for time. So let's talk reconciling PayPal. Once you've sent all the sales into the books with your integration app and you've downloaded the PayPal statement, we're either again looking at lump sum or transactional. So let's use A2X and lump sum as an example. A2X is going to do that lump sum journal entry. And for third-party gateways like PayPal, it's either going to be a daily, weekly, or monthly summary. In that case, our reconciliation process is a little bit different. So let's look at an all one currency example. So this is all Canadian or it's all US, it's all one currency. Since A2X is doing lump sum entries and that's not how it's showing up in PayPal, we're going to want to use a PayPal clearing account. A2X is going to drop the lump sum amount into the PayPal clearing account for all the PayPal sales for that period. And if your client has their PayPal account linked into the bank feeds, they can set up a bank rule to automatically do transfers from PayPal clearing to the PayPal bank to match each individual sale. And this will clear out the balance that's sitting in the PayPal clearing account. You can then also set up a rule to process all the PayPal fees as expenses automatically. You now have dealt with all the sales, you've dealt with all the fees. You just need to review if your client has done any purchases with PayPal and record those. And you're now ready to use your PayPal bank statement to reconcile. So the opening balance shown on the statement should match to what you have on the opening screen for the reconciliation. You're going to enter in the closing balance. You're going to check off all the sales entries, all the expense entries for the fees, and any transfers from PayPal to the bank. And again, if they've made any perk purchases, you're going to check off all of those. And it should reconcile. If it doesn't, you can drill down into the details of the transactions and the details into A2X to find out why am I not lining up. And lastly, you want to then reconcile the PayPal clearing account. And in a perfect world, it's going to reconcile to zero. But again, due to timing, you may have some holdover at the end of the month. If it's multi-currency, you're likely not going to be able to perfectly reconcile the PayPal clearing because you'll have some currency discrepancies and you need to do some adjustments to exchange gain and loss to make it work. If we're doing individual, so this is apps that are putting individual transactions, the sales are coming in one at a time, individual sales receipts, and that actually aligns with our PayPal statement. So we don't need that PayPal clearing account when we're doing transactional. Once the sales have been sent into the books using the integration app, and you have recorded your PayPal fees, if the integration app doesn't do it for you, a lot of them will actually enter those for you. Then you would go to entering your purchases that were paid with PayPal, record any transfers if money was moved from PayPal to the bank or from the bank to PayPal, and away you go. Now you check your opening balance, you're going to enter the closing balance from the statement, and then you're going to use the PayPal statement and you're going to check off each individual sale, each of the fees, all the transfers, and the purchases. And in a perfect world, it's going to work. And if it doesn't, you may have to, look at the integration app to see if something went wrong. You may have to pop into, if it's Shopify, have a look in there. Often I find these integration apps will help too. So you can reach out to them and say, hey guys, why is things not lining up? A lot of our apps will help us and make sure that things are coming in nicely for you. But again, you're watching for multi-currency differences. Now, this process all sounds great, right? But what if you have a client with thousands and thousands of PayPal transactions a day? We have clients with a 200-page PayPal statement. This method would become incredibly cumbersome in that case. So we actually have a different method of managing PayPal for large clients with lots of transactions. And we call it our summary method. Unfortunately, I had to cut it out because we didn't have enough time for it. But if this is something you're struggling with, please reach out and I will help you. We do also, of course, teach it in the academy, but if you need some assistance, I want to help you with that. Let's do another poll question, shall we? I think they're backwards, but this is how many of you are using clearing accounts? So tell me now, how many of you are using clearing accounts right now to manage your clients? We're just going to give you a few seconds here because I am going to run a tiny bit over. I want to show you Shopify payments. It's much smaller. You will get access to the slides. You will also get access to the recording. So if you have to pop out and, no problem, go watch it on YouTube. It'll be there. So 71% of you are currently using clearing accounts. 29% are not. So for our 29%, I'm hoping this has done a bit of a light bulb moment on how things can get much, much easier for you. Okay, let's just take a couple minutes. I want to take you through Shopify Payments. Shopify Payments is built right into Shopify. It's actually powered by Stripe, but it is housed right within Shopify and allows sellers to accept credit card, Visa, MasterCard, Amex, Discover, all kinds of things you can use. And they also have Shop Pay, which there's news on that. It's become a marketplace, but we don't have time to talk about that today. And I have to say, Shopify Payments is used by most of our clients. So if you're working with Shopify Payments, if you're working with Shopify and they're using Shopify Payments to get the reporting, you want to go to Analytics, and then you can go to Reports, and then you're going to choose the summary. It is the finance summary. And it will look something like this. From here, anything that's blue, you can drill in and see the detail, which is super, super helpful. You can also see what was paid with Shopify Payments. And if you go in here, you can get some information, but I prefer to use a different method to access the details on the payments. So instead of going in here, instead I go to Settings, and then we choose Payments, and then View Payouts. And this has better information for you. So here, you're going to get the gross sales, refunds, adjustments, fees, and the net payout. And the net payout is exactly what you will see coming into the bank as a payout. So you now have all the details. And if you drill into the date, you will see which sales are in that payout, which can be super helpful if you've got a misalignment and things aren't quite lining up between the books. Very quick pros and cons. Great reporting. It's built in. It's easy to set up because it's already there. Fees are very similar to the others. It is very well known and trusted. It handles multi-currency, no problem. But don't forget that Shopify is converting back to the home currency. They recently did offer the ability to choose. So if you have, you can say, I want my US sales paid out in US and my Canadian sales paid out in Canadian. You can do that, but they charge a fee for it. Sales tax is perfect in there. They have lots of different point of sale systems. On the con side, they do charge some additional fees if you want to attach a third-party gateway, and the conversion rates on those sales are higher than the bank, so they do cost a little bit. Unique challenges, not very much. Really can't find any. We love it. We highly recommend your clients use it. And when it comes to connecting to the bank, you do need to use an integration app to get that information into the books. In summary, I really do recommend that you push your clients to use it. It's going to make your processes much easier because you don't need to do a second reconciliation process. If you attach a third party like PayPal, like Square, you're going to need a process of reconciling that. This is built right in. It is part of the sale as it comes through into the books, so it's much easier for you. Okay, I know I'm just a couple of minutes over. I promise we're going to wrap up. I know that we talked about a lot, and I probably talked fairly quickly trying to fit it all in, but you can go and watch this. Emails will be coming out. You can come back and watch it as many times as you like. You will be given a copy of the slide deck as well for reference. And you know, when it comes to payment gateways and clearing accounts, it's all about understanding the workflow that leads to an effective reconciliation that is audit proof. Everything ties together. How the payment gateway works, how the integration app works, will determine when you need a clearing account, and it will determine the right workflow for you. And having the right workflow will save you incredible amounts of time, stress, and headaches. E-commerce bookkeeping is complex, but we strive to make it easier for e-commerce sellers and for the accounting professionals like you that love them. As we wrap up, just a reminder, scan the QR code, get your free ebook. If you have any questions, please reach out to me. My email address is on the screen for you right now. And I just want to thank all of you for being here with me today. I hope you found value in the presentation, and do feel free to connect with us on social media, check us out. And now I am going to go through and see what questions we have and make sure that you get the answers you need. So let's do that now. So I am going to go to the Q&A. I can actually probably stop sharing my screen. Let's do that. And stop sharing. Here we are. Here you are. Okay, here we are. Let me go to the Q&A and answer those, and then I'm going to go through the chat. So we do have a few questions. The first one is, I have a client that uses Uber Eats exclusively. The monthly reports are very confusing because they have a lot of fees and HST applied. And the revenue coming into the bank account is the only thing that seems to match. These sales are coming through Square. What is the best way to pick up the Uber fees? Yeah, I've seen these challenges before, and this is something as accounting professionals we need to work with these partners and make them understand what reporting we need to do our jobs. I know I did a lot of work with Shopify about 6 years ago, and they added a whole bunch of reporting based on me going, look, this is what accounting professionals need. Um, so with Square, you can use an integration app to bring the Square information in. And then I would probably be logging into Uber to get the fees. And I would probably just do a lump sum entry for all the fees. And I would be using a clearing account because you're going to have the gross amount of the sales coming in to an Uber clearing account. Then you're going to have transfers for the actual amount you received as deposits. And then you will have an expense entry for the fees, hopefully clearing out that. So I hope that helps you. Okay, Rachel asks, my client has PayPal bank feeds. Recently, though, she ran into an issue about the expense, the fees portion not being linked to QBO. It appears that PayPal may have switched to an app link like into QBO. For now, we switched to manually importing the PayPal sales because she keeps getting an error about the fees not coming in. I actually haven't run into that, but I know from speaking with Intuit that they are working on making the PayPal feed connection better. It sounds like they've made it worse, but maybe this is a step along the way. So I would agree with you. Don't put them in a bank feed if it actually isn't going to save you time. Sometimes what we do is we will export a CSV from PayPal and we will import it into the bank feed. That can work quite well because you can download it, sort it by currency, and then if you have, a USD PayPal and a Euro PayPal, you can create a feed and then run your rules. So that is another way to do it too. Andrea asks, what's the difference between a Stripe expense account and a regular Stripe account? That's a great question. I'm not exactly sure what you mean by that. Do you mean within Stripe or do you mean accounts being set up in the books? I hope you're still here. I'm not sure, Andrea. If you are, maybe you can clarify your question and I'll make sure I answer. And then Lisa. So Andrea says expense account, it's a type. In Stripe or a type of account in the books? Oh, are you saying it's Stripe Express? I haven't experienced a difference. The reporting seems the same. I've been able to pull reports from either. I haven't seen a major difference. If you're running into anything specific, Andrea, I do know you, so reach out to me and we can chat about that. So I want to make sure you get a good answer. Okay, and then Lisa says, what is your preferred app for integrating Shopify to QBO? Looking at Bookkeep, SAP, Sesant, or Cinder, others to consider. Okay, my top two apps for lump sum, I love A2X. A2X is an amazing system, and if your client is not doing inventory in their books, I highly recommend that as the choice. It's going to have the most seamless connection and the least amount of errors. But if you need individual, like for example, your client has all their products and their SKUs and their quantities in the books and you have to do individual entry to manage that, I highly recommend Dext Commerce. It used to be called Greenback, but then Dext bought it. So it's called Dext Commerce, and truly it is awesome. The support is amazing. You've got tons of mapping and connections that you can do. Their support, they will do custom mapping in the background for you for interesting situations that we see happening. So those are my top two. Though we do use Cinder for a few things, we just found Dext Commerce to be better. And can I get the recording? We've already answered that. Shopify tax collection and submission, question mark. Not exactly sure what the question is, but Shopify, you can do all of your tax mapping in there. So whatever jurisdictions your client is registered for, you're going to enter that into the settings, and then Shopify is going to charge, collect, and remit that tax, and it will be given to you as part of the payout for you to do the filing and the payment. ShopPay is different. It is now a marketplace, so it's doing its own payment of tax, but we can talk about that another time. And Andrea says, what's your favorite app to manage the various platforms? Yes, I just answered that. A2X, Dext Commerce. And then what do you find is the best process for establishing a starting balance on a clearing account? For a buy now, pay later installment payment method like Klarna. For example, the gross sales posting starts on September the 1st, but the payouts from Klarna include a mix of pre-September 1st sales and post-September 1st sales hitting the bank account. Yeah, we work with Klarna, Sezzle, a lot of them. So again, you're going to want a clearing account. Set up a Klarna clearing account. If you're using A2X, I love how they do it because they will lump things together and they will do they will do two entries. One will include the sales up to the end of the month, and another one will include the sales after the month. But use a clearing account, have whatever integration app you're doing, put all the sales into that clearing account. Then you will do transfers based on the payout to the bank. You will record the fees. And that's going to be the best way, because if you're entering them individually, they will come in with the correct date. So the sales that happened on, August 29th, 30th, and 31st, they will be entered that, but the money will be sitting in the Klarna clearing account. And then your sales on 1st, 2nd, and 3rd, they'll also be there, and you're going to have all that money in the clearing account, and you're going to transfer from the clearing to the bank based on the payout. So that's going to be the best way, in my opinion, to manage that. So thank you for staying around an extra 11 minutes. At any time, feel free to reach out to me, and take care, everyone, and enjoy the rest of your day. Thank you so much for being here with me. I do appreciate it. Bye for now, everyone.